Hello everyone. As you know that we are doing chapter 1 from past few lectures, an important chapter of part 2, accounting for share capital or share capital transactions. We have been doing theory concepts from past 2 lectures I think, and even today we are going to continue with the theory and maybe a bit even in the next lecture, and then we can start with the practical sums. But before that, you need to watch all these lectures of theory thoroughly. You need to understand them, and only then you can solve practical sums. And trust me, the practical sums from this chapter are really interesting, extremely interesting they are. Yes, all you need to do is just to learn the journal entries. First, understand them and then learn them. And also try to understand the concepts of theory properly. Yes? So, let us quickly revise whatever we have done in the previous lecture. Yep, this is the third lecture, I think, for theory concept. We have learned and we have understood theory from past 2 lectures of the same chapter. Yes, so today is the third lecture for the same, and you need to pay your 100% attention. Okay, the very first thing that we have understood in the first lecture is what is a share and what are its types. Then we have understood the classification of capital of a company: authorized capital, issued, subscribed, called up, paid up, reserve capital, etc., etc. Then we have understood what does minimum subscription mean. We have understood the terms of issue of shares. What does issue price and face value or nominal value mean? What is the issue of share at par? Issue of share at premium. This is not in your syllabus. Issue of shares at discount. Subscription. We have understood what is full subscription, under subscription, and over subscription. We've understood journal entries for when shares are issued at par, a case of full subscription, 6 journal entries. 2 for application, 2 for allotment, remaining 2 for calls. Can be first call, second call, can be final call, anything. Here are the important notes. You know this, of course, very well. Then issue of shares at premium, the second topic, and the journal entries that I have explained in the previous lecture itself, that when the premium is called with application, this is the journal entry. When with allotment, this is the journal entry. When with call, this is the journal entry. So these journal entries are just similar to the previous concept of issue of shares at par, with a minor change, very minor change. Other than that, journal entries are same. Yes? Okay, so let us move ahead. Issue of shares at discount. This topic for issue of sweat equity shares is not in your syllabus, but yes, the theory concept of sweat equity shares is given in your textbook. You must go through and you just have to read it once for the purpose of theory, and the practical sums for the same topic are not expected in exam. So let us move ahead. Okay, it says when issue is undersubscribed, Which was the first topic? It is fully subscribed, issue of shares at par, and a case of full subscription. And here the topic is about under subscription. What does this mean? Firstly, if the issue is undersubscribed, this simply means, consider a simple example. A company has issued shares of rupees, the number of shares issued by the company are 30,000. And the applications are received for 30,000. What do you call this case? A case of full subscription. Yes? Now consider the same example in a different way. A company has issued 30,000 shares and has received applications only for 25,000. Then this is the case of under subscription. Yes? If the issue is undersubscribed, it may be assumed that minimum subscription has been received and the shares are allotted to all the applicants in full. So the shares are given by the company to the people who have applied for it. But all the shares are not subscribed. Less number of shares are subscribed. That means if I have issued 30,000, subscription is received for only 25,000 and I have allotted 25,000 shares to the applicants. That is the case here. So entries will be passed for actual number of shares applied and allotted. So the journal entries that you are going to write in this case, right? You will consider the number of shares applied and allotted, not the number of shares issued. Number of shares issued were 30,000. Number of applications 25,000. So what you are going to consider? You are going to consider 25,000, not 30,000. Why? Because shares are applied and allotted for 25,000. Yes, 30,000 and 25,000 are just imaginary figures. It's just a simple example to understand this topic. Okay? Fine. So this is the journal entry in the case of oversubscription. First alternative. Sorry, there is a change in the topic. My mistake. The journal entries for this case are not given because there is no change in the journal entries in this case. There was a mistake. The journal entry is for oversubscription and that topic I am about to explain yet. And here there is no change in the journal entry. The only important thing that you are supposed to consider is that you will consider the shares applied and allotted. Rest of the journal entries will remain same. That for issued at par, issued at premium, the journal entries will remain same. But only the number of shares that you are going to consider is the shares applied and allotted. Okay? Then comes the case of oversubscription. We'll consider the same example of 30,000. Okay, try to understand. You have received applications for 40,000. The number of applicants are 40,000. But you have only issued 30,000 shares. So how much is excess? 10,000. What are you going to do with that? Say for example, there is a company the company has issued 30,000 shares. Alright? And the applications are received for 40,000 shares. So this is a different situation. So what to do with those extra 10,000? I mean the company has issued 30,000 shares on the basis of the requirement. Yes, but the applications are received for 40,000. Yes, this is the case reverse to the previous one. What was the case previously? It was when you receive less number of applications. And here the case is when you receive more number of applications. That is why the previous topic was under subscription. Here it is over subscription. So you are having options here. How to deal with those extra 10,000. First alternative, rejecting excess applications. That means the extra 10,000 applicants that you have received, you will not accept them. You will reject them. Yes, and in such a case, the journal entry is this. Yes, if you remember the journal entry for receipt of applications, the very first journal entry, when application money is received, what it was, try to recall. Bank account debit to share application account it was. Yes, this is for receiving money, and this journal entry here is exactly opposite to it. It is for rejecting applications. This is reverse. Share application account debit to bank account. That means you are rejecting an application. The previous journal entry that I said right now was for receiving application money, and this is for rejecting. Why you are rejecting? Because 10,000 applicants are in excess. Yes? Alright. So let us read this in detail. Under this alternative, excess applications are outrightly rejected and their application money is refunded. That means the people who have applied for the shares, the extra, I will reject their application. I mean the company. If I say I will reject, you just have to consider that the shares are issued by me, my company. Alright. So will be rejected by the company and the amount will be refunded. That means the amount is returned to those people. And the journal entry for returning that amount is this: share application account debit to bank account. Alright. See, these are the journal entries and topics which will make minor variations in the previous journal entries that you have learned. When you will be solving a sum practically, when you will be solving a practical sum, all these journal entries will be merged and applied in a topic. Yes, applied in the same question. Yes, so please try to understand it for now. Yes, being excess application returned on rejected applications, right? So we are clear with the topic of under subscription and over subscription. Here we have learned a new journal entry which says the rejection and refund of excess applications, right? Okay, let us see which is the next topic. See, we have merged the journal entry. Sometimes the surplus application money exceeds even the money due on allotment. Such amount has to be returned. However, it can be retained by the company for utilization towards the future calls if the articles of association so authorize. Now, here is the second option for dealing with the excess 10,000. What was the first case that we understood that you will reject? I mean, the company will reject the excess 10,000 applications will be rejected by the company and the amount will be returned to them. But the second option says that that particular amount will be retained in the firm. That means the company will not return that amount. Instead, it will be retained in the firm. Company, sorry. Retained in the company, that means usko company में ही रखा जाएगा and will be transferred to the further calls, which can be share allotment for calls and either it is returned. Yes, ये आप return कर रहे हैं उसका effect. This is the advance money for allotment and calls in advance. That means if you are not rejecting the applications, yes, you will transfer it to share allotment account or in calls account. You will consider it as calls in advance. That means the amount that you are supposed to call in future is received already. That will be considered. This journal entry also will be more clear when applied practically in the sums. This is just an option how to deal with oversubscription. Yes, first option is that you will reject it. Here it is, you will reject it. Second option is that you will transfer it to share allotment money. You can also transfer it to calls in advance. Yes. The first alternative and the second alternative, they have been combined and presented in third journal entry. Let me repeat this. I think I missed a slide in between. Sorry for this. Let us start from the beginning. So the very first option is that you will reject excess applications. That means the extra applications that have been received by you, you will reject them. That means you will return the amount to the applicants. That is called refunding the amount. Share application account debit to bank account is the journal entry for rejecting excess applications. Otherwise, you can choose the second option. The company, yes? The company can choose the second option, that proportionate allotment. The journal entry for which is here. That means you are not rejecting the amount of excess applications. Instead, you will keep it as an advance of share allotment. Let us read in detail. When issue is oversubscribed, applicants may be allotted shares in a fixed proportion. This is called proportionate or pro rata allotment. We are also going to have sums for pro rata allotment. The proportion depends upon the shares offered and shares applied. In this case, surplus application money is adjusted towards sum due on allotment. This simply means that the excess applications, instead of rejecting them, that amount will be kept in the company and will be adjusted for the next call, which is of share allotment. Further, it will be more clear in practical sums. Sometimes the surplus application money exceeds even the money due on allotment. This means that the excess amount is that much that even after adjusting it with allotment, still there is an amount in excess. Then it is transferred to calls account and is to be considered as calls in advance account. Alright. So this is the journal entry altogether for all the alternatives in the case of oversubscription. Alright? Okay. Third alternative, a combination of the above two alternatives, this one. The directors may adopt a combination of the above two alternatives. Some applications may be accepted in full, some will be rejected, and some will be allotted in proportionate. Alright? So it is not necessary that you will accept only first alternative or you will accept only second alternative. It is also possible that you will adopt all the alternatives partly. That means you will accept some applications in full, some you will reject, and some you will allot in proportion. We are having sums of similar kind in your exercise of chapter 1 in the textbook. We'll surely do them, and during that time this topic will be clear. Okay. Calculation of arrears in case of pro rata allotment. This topic, I think it does not appear in the practical sums in your syllabus, but still if it does, then we'll understand this topic along with understanding the practical sums. जब हम sums सीखेंगे तभी आपको ये topic उसके साथ समझा दिया जाएगा. So let us see what is ahead. Okay. Again, there is a topic of theory, which is a right issue of shares, issue of two types of shares. Let us understand. The concept of rights shares is related to the further issue of shares to the existing shareholders in the proportion of their holding. Accounting treatment is the same as for the public issue. Right issue of shares is for the existing shareholders. Already the one who are the shareholders of the company have the right issue of shares, and the journal entry is same for the public issue. That means the journal entries that we have understood remain same even for this topic. Then comes issue of two types of shares. A company may issue two types of shares at a time. These are equity shares and preference shares. When two types of shares are issued simultaneously, separate accounts are opened for each type of shares for capital, application money, allotment money, and call money. Obviously, if the company issues two types of shares, then the separate accounts are to be made for application, allotment, and for each type of share capitals. If it is preference share, the account is going to be separate. If it is equity share, the account is going to be separate again. Then preparing a cash book. Okay. Cash book with bank column may be prepared if you are asked to prepare the same. Now this simply means that if in the given question you are asked to prepare a cash book, which is not the case in so many sums. Most of the sums they do not ask you. In most of the sums they do not ask you to prepare a cash book. But in case if you are instructed, then you should prepare this with the column of bank and not cash. Because the transactions, the share capital transactions always take place through bank and not cash. This transaction can never be in the form of cash. They are always to be done through bank, and a separate bank account, which is demat account, is to be opened for this purpose, and all the transactions related to share capital are done through this. And the second point says that all bank transactions shall be recorded in cash book, the cash book that you are preparing with the column of bank. Journal entries will be passed only for non-banking transactions. They have actually highlighted a type of sum here, that whenever in the given question, if you are supposed to prepare a cash book, then you will prepare it with the column of bank, and all the transactions related to bank, that means the journal entries which consist the word bank in it, will be posted in cash book with a column of bank, and the journal entries, remaining journal entries only, will be written which are for non-banking transactions. Yes, that is when allotment money becomes due, when call money becomes due. Yes, all those which does not have the word bank in it. Yes. So this is how you will prepare a cash book. In case if you are asked to prepare a cash book, then you will follow these points. All right. Let us see ahead. Okay, here is the new thing. It says maintaining a combined account of application and allotment money. Now sometimes you will be instructed, I mean the general instruction will be given in the sum, that you have to maintain a combined account of application and allotment money. Yes, so let us read these points in detail. A company may maintain only one account for application and allotment money. That means whatever amount is received for application will be transferred to application and allotment money. Even the amount which is received for allotment money will be transferred to application and allotment money. Why? Because the company is maintaining a combined account. In such a case, all entries relating to application and allotment are passed through an account called share application and allotment account. What is the case otherwise? You are writing it separately. You are writing it as share application account. And in case of allotment, you are writing it as share allotment account. No. You will be writing it as share application and allotment account instead, in this case only. Why? Because the combined account is to be prepared, maintained. In this method, only one entry is passed for making due application and allotment money. Why? Because the combined accounts are prepared. So the journal entry for making allotment money due and transferring the amount of application will be combined, and instead of two, only one entry is passed. Alright? There is no need to pass an entry for surplus application money transferred to allotment account. In case if there is oversubscription, then they say that there is no need of writing down the journal entry for transferring the surplus amount to the allotment account. Yes, the topics that we are dealing with turn by turn. Yes, will be applied practically in sums again turn by turn. That time we'll revise these topics and you will get to know how important understanding of these topics is. We also have the sums of this topic, maintaining combined account of application and allotment. And all these points are to be considered during that time. You might be thinking right now that God alone knows what kind of theory this is. We are not able to understand much. It is possible because the chapter, topic, and concepts, all of them are completely new. But trust me, once you will pay attention, you will get to know things and things will be easy. Alright, so here we end the session for today. Till then, stay home, study well, and stay safe.